the daily Forex.com trading desk. This is Christopher Lewis looking at the April 11th session in the Euro US dollar pair. As you can see, the candle has just closed for the Tuesday session, and we did have a weaker session before the Tuesday session. On Monday, we did have a hammer, so it is starting to show signs of support down near the 130 level, which by all accounts does look to be like a pretty significant support area. However, the recent fall has been pretty much non-stop, and now we are just bumping along the bottom. The bond markets are really what traders are going to have to pay attention to at this point in time. We are back to being concerned about Spanish and Italian bond rates as the yields are climbing in most of their bonds that they offer in the various time frames. So as such, the market will continue to be concerned about it, and with all of the headline risk coming out of Europe, it just makes no sense whatsoever to buy the euro, although there is an argument to be made that perhaps buying at this support level could produce a bounce. We as traders often try to pick the bottom or the top, and to me it's becoming increasingly obvious that there is some kind of problem with the euro or overall. As you can see, every time it's risen, it slams back down to 30, and to me it just looks like it's trying to slam into 30 and eventually through it. It's a little bit complex, but it almost looks like it's trying to form a head and shoulders as well. So if we do get that daily close sub 130, I'm actually going to treat it as a head and shoulders and expect about a 500 pip move. Certainly the most recent lows at 126 would be a viable target as well. As far as buying, it just simply isn't going to happen. So I'm looking to sell weakness as we rally, and it looks like right around 132.50 or maybe 133 we could see resistance as well. So even on a pop-up, I'm willing to use it as another entry to sell the euro. With all the headline risk coming out of the EU, there's just simply no good reason to own it as far as I'm concerned. Your trade could turn around in a heartbeat, and as such, it's just safer to play it this way from the short side, in my opinion. Also, we do have the 200-day moving average, which has deflected the price of the markets a couple different times, and it is still continuing to fall. So trading with the trend is always the safest way, in my opinion, and that is how I will be trading the euro going forward.